All right, cool. All right, let's take a look at Dave. Hopefully, Braden's still on. He just signed off a minute ago. So, Dave provides various financial products and services through its financial services platform in the United States. The company offers budget, personal financial management tool that helps members with budgeting and managing income and expenses, extra cash, a short-term liquidity alternative which allows members to advance funds to their account through automated clearinghouse network and avoid fees, side hustle, a job application portal. Okay. So accept all. So this is an app you can advance some cash if you need it. Okay. So it's kind of a new spin on banking. And then they've got you can earn cash back. Oh no, earn interest on your accounts. Okay. They probably have no branches, so they can keep cool. I'm glad Braden's on. So they have no branches, so they can keep their costs down. So it's a completely digital enterprise. Very good. Okay. So see, this is like Robinhood. They're not going to start a bank that looks like a bank that you've seen for the last 50 years, but they're just attempting to do it better. No. We want to break the model. We're going to do a totally different model. What's the deal with side hustle? So you can go on the platform and apply for side hustles, huh? Completing surveys. Very cool. So this is a little bit like what's that company? Upstart. No, not Upstart. Upwork. They do side hustle. It's like a job posting for side hustles. All right. So I like their innovative proposition in the market. So I like the concept. Now let's see if I like the fundamentals, which is very important. So this is why I don't buy IPOs. The IPO, everybody's at the party, having a great time. Appetizers are really, really good. And then the party's over and slam, got a bunch of dirty, empty cups, too much trash. Everybody's got to sweep it out. The stocks really come down, right? Geez, and it came down hard. If you were an investor, you invested at $318 per share and then saw your shares go down to $5.79. But now the stock has really flourished. 547%. Whew. What a rise. What a rise. Okay. So $2.7 billion market cap, revenues $433 million, net income $55 million. Okay, PE ratio 51-24. These guys are a different spin on SoFi, and SoFi has been a good rewarding stock for many. Discounted by 31%. They have good growth, 48%, and they have been accelerating their growth. Look at that. That's a beautiful growth rate. 64% from 46-37. That is getting it done. Give your vice president of sales a pat in the back. All right. Looks really good. Looks really good there. They are making money. Gross profit. Sorry. Getting ahead of myself. So gross margins are 67%. You see how they're growing gross margins as they get bigger? That's a very good sign. That means it's going to keep getting bigger as they expand. So free cash flow, 191. So I want to look at their financials because I want to see if they have to report net interest margin, classifying them as a bank, or if they're classified more as a financial services company. So All right. So they grew really well. Net increase in net income, very good. They're in Los Angeles. Okay. So they have new members. They have, this is like a, so do they charge a subscription to be a member? Is it like Coinbase has got Coinbase One where they charge a subscription? Do you know that, Braden? Hey, how you doing, Tomas? Good to see you. So let's take a look. So they're guiding, they're going to keep growing. Good. Let me look at their financial, their income statement. So they're doing, see, service-based revenue. They're doing a subscription of some sort, and then they do transactions. They're doing a provision for credit losses. Some people may not pay them back, but they're not classified as a bank. That's what I wanted to get my head around. Okay. If it was a bank, they'd have to track net interest margin. So they're doing advertising. Okay, that makes sense. Let's see if they give us a statement of cash flows. No, they didn't. Okay. All right. So I did get my question answered of what type of business they are. So, all right. So these guys, free cash flow at 192. They're growing nicely. They're worth like 8 billion if you really believe in their business. This is a really interesting business. If they're going to cash flow at that rate, they're worth a lot more because they're going to keep growing. They're going to keep growing their gross margin. They're going to keep growing their profitability. They're going to keep growing their cash. And they're creating kind of a new business within a huge industry. And I think that the creativity is probably attracting a lot of younger adults that are like, yeah, like, frankly, I'm 56. I do not like going to my bank. Nice people in there, really nice. It just doesn't have a really good experience feel to it. You walk into an industrial building, I guess it feels a little bit like I'm going to the DMV, and then you kind of do your thing. I go there every once in a while, mainly to the ATM to get cash. And if I have to walk into the bank, it's not a pleasant experience. So we're not dealing with an industry that has just such a positive kind of customer experience. So these guys changing the rules probably is more attractive to a lot of people, including these younger people that are totally comfortable with this type of digital experience. So these guys, what I wanted to look at was their balance sheet. So balance sheet, more cash than debt. Very good. All right. So let me crack open a valuation schedule. I'm going to fill that out, and I'll pass it over to you, Daryl. See what you're seeing over on this particular stock.
Yeah, the market's pulling back a little bit at the moment. So it looks like they didn't pick the best time in the world to IPO because 2022 was a really bearish market. So a lot of this was probably out of their control. But they really took a hit in 2022. Finally getting as low as in the $4 range. And it looks like they had a reverse stock split at the beginning of 2023. But they've had a super nice recovery. If you look from this to where they are to now, it's 3,942% gain since late 2023. So let's pull out a bit The RSI is currently negative, but it is improving, sitting at 44.42. The PPO has turned negative. Seems to be improving slightly, so they're not very negative. They could move back into positive territory shortly. Had fairly nice accumulation. It's pulled back a little bit here recently, and the money flows have gone slightly negative, not enough. We're kind of in no man's land. I have a green line and a red line here. And as long as it's between those two, this is kind of in no man's land. It needs to either get above 0.05 to be bullish or below minus 0.05 to be bearish. So right now it's kind of sitting in between those two levels. It is outperforming the S&P 500 by 376% over the last year. It's outperforming the financial sector by about the same amount, 350%. It's outperforming its industry group by 325, and the industry group is outperforming. So looks like a pretty strong company and a strong industry group.
Yeah, and I like small caps that have a new idea that makes a lot of sense.
Yep.
And I'm kind of putting these guys in that category. It's like, these guys, what they're trying to do makes a lot of sense. And again, it starts with what is the existing, industry doing? Well, it's kind of like what we've been doing for 100 years when it comes to banking. And some people cringe at, oh my God, I have to talk to my bank. What a drag. And that's totally understandable. See how I kind of in my head said it's going to be like $8 billion. And I guess I was in the ballpark. So cash, I'm going to construct this guy really fast. So cash was 102 million and then debt was 75. The reason I do cash and debt, sometimes you find a business with a lot of debt and I decrement that from the value. I think it's a fair way of saying you may have a terrific business, too much debt, it kind of spoils the recipe. All right, shares outstanding. 13.5. Yeah, big discount on cash. They're really producing cash. That's very special. For a small business to produce cash, that means that they're doing something that's just very very profitable, very lucrative. Okay, so man, this earnings per share is huge. Am I looking at the right company? Dave. Okay. $7? So this is for the quarter. $3 for the quarter. Okay. So they're going to make a lot of money this year. Okay. So $7.08. And this is a very interesting stock. This is gonna be a stock that I'm gonna closely watch and maybe buy. What's it been doing recently? Like, has it been going up, down? What's the story there? So year to date. So it had a really nice run up. Man,
It's
went up
been consolidating since
it
the
went up
second
267
week of May or so.
from April 7th to July 7th, 267. Man. So, but from I guess from May 14th to now, up 8%. So it's been consolidating.
Yeah.
The fundamentals are just tremendous on this. And do I think they have a big addressable market? Absolutely. Huge. And this one's really interesting to me. Now, I'm not going to jump ahead and say, oh, this thing's a buy for me. It's looking like a buy. I just got to look at this, make sure I'm seeing everything right. I'm going to probably try to dig up any stories that are on it. And if I feel the same way tomorrow, I might start a position on Dave. That's as good as I can get on a really small cap like this. I like a lot of things I'm seeing at Dave. What do you think, Daryl?
It's looking like, the fundamentals look great. And it looks like the 50-day and the 20-day is turned back upward trending, and it is trading above its 5-day after trading about a week below it. So it's looking like it could be a good time to buy as long as you buy into the fundamentals and a business you want to hold. It looks like a pretty good time, actually.
Yeah, good one. Good one, Braden.